Onto your markets news now. Asian stock markets were on positive form today on the back of data around economic growth in South Asia, as well as hints from Chinese authorities that more is set to be announced in terms of a fiscal stimulus plan for that economy. The uptick was also influenced by a healthy close in U.S. markets last night. The Nikkei share average rose by 0.26%. The Hang Seng Index jumped by 3%, while the Shanghai Composite Index ended the session up 1.32%. U.S. stocks pushed higher with the Dow and S&P 500 hitting all-time highs yet again. Market players were assessing the recent Fed minutes while also awaiting the latest key inflation data. The minutes indicate that the vast majority of Fed officials opted to go for the 50 basis point cut last month, with some thinking that they may hold off cutting in November. The Dow Jones Industrial Average rose by 1%. The S&P 500 gained 0.7%, while the Nasdaq Composite Index ended the session up 0.6%. The JSE is mainly weaker at this hour. The all-share index is flat at 85,370 index points. The Industrial 25 index is 0.2% weaker. Financials gained more than 0.5%, and the top 10 resources index is 0.4% lower, and the precious metals and mining index is down 0.1%. The rand is trading at 17.56 against the US dollar, slightly firmer than this morning, 23.01 to the pound sterling, and 19.23 vis-a-vis the euro. Looking at commodities, gold is trading at $2,614 and platinum at $956 per ounce, while the price of Brent crude oil is trading at just above $77 a barrel. Well, to unpack the markets for us, I'm joined by Simpiwe Letlojana. He's the investment strategist at ABSA Investments. Thanks very much for joining us, Simpiwe. So what's your reading of the latest Fed minutes? What did they have to say, and what's your interpretation?
Certainly an interesting one. Of course, it was interesting to see that the decision was fairly contested, but majority of the members did vote for the 50 basis point cut. And what was key is that they also do see that interest rate cuts are fairly important in terms of negotiating that soft landing and orchestrating that soft landing and avoiding a recession. And so, of course, that really gives us quite a good guidance in terms of what to expect from the Fed going forward. Of course, they have said that they'll continue monitoring economic data as it unfolds, especially around some of the concerns that they have with core inflation, and they'll be monitoring those in order to assess in terms of what we can expect going forward.
In the meantime, U.S. markets, they keep on hitting all-time highs. How sustainable is this?
Yeah, so markets, we do certainly expect that markets over the long term should, and that's indeed what we do demand from from global markets and local markets, to hit those record high levels in order to provide, real returns for our clients. Of course, what does then become a bit of a concern is if valuations run ahead of the underlying fundamentals. But certainly when you're looking at some of the sectors at the moment, you do see some of the sectors appearing a bit stretched, especially if you're looking at the tech sector. But the underlying fundamentals and underlying profitability levels have actually also improved relative to history. And over and above that, what we're also beginning to see is a bit of a broadening in earnings growth expectations, where we're seeing inflection points for a whole lot of the other sectors as well, meaning that we can expect returns to also be driven from those sectors as we see a bit of rotation, and hopefully that can sustain the positive momentum we're seeing in pricing.
Yeah. So with all the positive narrative about South Africa in recent months, how has this translated in the purchase of South African government bonds? Because, of course, when things were not so great and sentiment was low, we kept on being told that people were selling off not only our stocks, but also our bonds as well.
Sure. So we definitely have seen, improving sentiments towards our local economy, and this definitely has translated in terms of local bonds. We're seeing broadly, when you're looking at different buyers on your local bonds, including foreign buyers, is that there's quite a lot of duration uptick. So a lot of them buying, are more longer dated bonds and willing to commit to, the longer dated bonds, meaning speaking to fairly improved sentiments towards the local economy. And that, of course, has boded well for, the overall yield curve in terms of some of the compressions we've seen, and asset class itself has done quite well over the past couple of months on the back of improving sentiment. So there is quite a lot of appetite, but of course, as we know, especially from a foreign investor point of view, they do still buy our bonds on a more speculative basis because we no longer are investment grade. But as we continue to, on that pathway to recovering our credit rating, that should coincide with increased appetite for local bonds as well.
Yeah, and sort of related to that is, of course, it's just a few weeks away before the midterm budget. What are some of the factors that you'll be keenly looking out for to see if the country is managing to balance its books better?
Yeah, certainly, definitely looking forward to the end of the month. Just looking back at the national budget, of course, expectations are that we were going to see a budget deficit of around 4%, for the current fiscal year. Expecting debt levels to kind of be not surprised too negatively, especially because there were measures that were announced in the previous budget that were specifically directed towards the containment of debt. And of course, we'll be looking out for any surprises. Hopefully, we get more positive than negative surprises. And if you're just looking at some of the things we've seen recently, we've seen improved operational performance from Eskom. So interested to see whether this also translates in terms of fiscal benefit, where the fiscus does not necessarily have to support the utility as much as it did before.
Thank you so much, Simpiwe, for your time and your insights there. That was Simpiwe Letlojana. He's an investment strategist at Absa Investments.